Pankaj, bringing you back on this story as well. Remember, US tariffs have been of critical nature and markets have reacted on these news, tweets, everyday statements right from April up until now. Help me understand, Pankaj, what's your thought process in case the negotiations with EU, sound positive for the export-oriented sectors, especially for the fisheries? Is that going to be a big positive for this sector? Would you look at it?
So, Sakshi, probably I may not be able to comment on fisheries, but textile is what we cover. So, we have a company under coverage called Gokuldas Export now. Overall sense is that this company would look to sort of do more of business with lower tariff destinations like, say, Bangladesh or your Sri Lanka or Africa. And in the interim, or for the next 1 or 2 quarters, company is taking a hit on the margin. So margins could come down from 11 or 12 odd percent to 3 to 4 odd percent. But all is not lost because with UK FTA, there is a expectation that the current $1 kind of an export can jump to $2 billion. With EU, expectation is that from $5 billion, we can get an incremental export opportunity of about $2 billion. And I think companies are looking to sort of diversify from being concentrated in US market, and which is why there is a hope that some of these companies can deliver double-digit kind of a growth in 27, 28. And this year is expected to be a challenging year, but all is not lost. So, and I think in case if we are able to do the tariff deal with US, even with a 20-25% kind of a tariff, I think our sense is that probably risk reward is turning attractive for a lot of these stocks.
Okay, fair point. Apart from the sectors that you talked about, especially the textiles, what are the other sectors that you're looking at? When we talk about the export-oriented sectors, we also usually talk about the IT and the pharma sectors at large. Now, we do know that at this point in time, there is no direct impact of any tariffs on IT because it's the service-oriented sector, and on pharma, where we are given to understand that some form of separate tariffs may be announced later and that we will have to tackle on a later front as well. But what is your approach on the IT sector and on the pharma sector? Large part of their revenues come from abroad, from countries like US and Europe.
So I think on the IT sector, our view is still sort of constrained by the fact that we still don't know how the tariff situation will pan out and the consequent impact it will have in the US in terms of inflation and also the kind of deterioration we will see in the overall economy. So that's a sort of a big question mark. While deal wins have been good, but conversion of those deal wins into revenues is still sort of not happening, and we are not too sure that we'll get clarity even next quarter as well. So IT again, while yes, stocks have corrected, but we are still not chasing some of these names. Pharma again, I think overall the threat still sort of lingers on whether 100%, 200% tariff. So that is also sort of a question mark. So I think at this point in time, it is better to look at some of the sectors which are domestic oriented nature. So for example, in the overall pharma and healthcare, I think hospital is one space it looks relatively lot more attractive. I think this is one of the few segments which can keep on growing at mid to high teen kind of a growth rate with pretty good margins. So there we have, or we like companies like Apollo Hospitals, Narayana Hrudayalaya or HCG. So I think one needs to be very selective in the export-oriented sectors. Not everything can be chased at current levels.
Okay, so domestic-oriented sectors, including hospitals that are least impacted or not at all impacted with all of these external shocks that we are seeing and uncertainties at large, is something that Pankaj is clearly positive on at this point in time as well. Let me also ask you, when Pankaj, when we look at the domestic-oriented sectors, how are you looking at something like an FMCG, a hardcore domestic-oriented sector? This has been a clear laggard for a fairly long bit of time. Plus, we are hoping that, the GST rationalization may be able to give some fillip to the volumes growth that have been absent from a long time, from many quarters for most of these FMCG giants. How are you looking at the FMCG space? Still, would you stay away from this one?
I think on the FMCG, there's no doubt there could be some bit of a volume growth which can pick up. Even the margin profile can improve in the second half, given that some of the raw material have eased. But I think from a consumption basket perspective, I think discretionary leg is something where we are more positive on. I spoke about auto. In addition to that, I think one can be selectively positive in segments like, say, for example, Tata Consumer or Marico, where the food segment of food overall contribution is higher, and that is where they can tap the unorganized segment in a far more bigger way. And besides that, I think you could have players on the hotel side, so the likes of ITC Hotel, Lemon Tree, or ITC Hotel. And in addition to that, I think we like EMS players. So these are good proxy consumption plays like Dixon, Sirma, and Number. So I think so. Our sense is that in some of these categories, you have both volume plus value play sort of coming in. Not necessarily that you will have a higher income, you're going to spend more on FMCG. I think you're going to spend more on discretionary side.
Okay. How are you looking at the PSU space at large, Pankaj, at this point in time? Do you see, some sense of a return to the erstwhile favorite PSU basket? On Friday, we had seen the defense stocks on fire. Today, we've been seeing the railway stocks back in momentum. Of course, largely, both of these spaces are working with the new order inflows that have increased, and most of the stocks are reacting to that. But do you see some sense of PSUs as a theme coming back into action?
So I think within PSUs, one needs to be selective. So, for example, on the banking side, government is talking of second round of consolidation. Our sense is that
Right.
last time we had seen a sharper rally, but this time around, it does not look like we are going to see a sharper rally because all banks are on a pretty relatively good asset quality position, and valuation gains are expected to be limited. But I think when you
Right.
look at the defense side, I think things are a lot more interesting, and
Yes.
you've got a good tailwind for growth. So there we like companies like HAL, Bharat Electronics, and in case if we sort of
Right. Pankaj,
uh,
I'll have to just, stop you right there because we have a breaking news that's coming in. The chief negotiator of the US is going to be coming to India tonight, based on which the further course of action will be decided. Remember, this is big news, viewers, as far as the tariff announcements are concerned and the negotiation that will happen from here after. Remember, there are some issues that are not directly related to trade that will also be taken up at the diplomatic level, is what we are given to understand. Of course, it's not a round of negotiations, but a discussion on trade talks will take place. Remember, this visit is for just one day, and they will be here for the whole day, and they will also be deciding on the future course of action. Remember, we've also seen before this the top level ministers from both the countries. We've seen the president of United States, Donald Trump, come out on social media platforms saying that he is still hopeful that both the countries will be able to arrive at a negotiation that is a win-win both the countries. We've also seen Prime Minister Narendra Modi reciprocate the same and say that yes, he still values US as a relationship that we share with the country, and of course he's also hopeful that things will be coming back on track when it comes to negotiations. And we'll just come back to Pankaj on the front. Pankaj, I think this is big news that's coming in yet again. Some more hopes of a renegotiation or a rediscussion on that 50% tariff that seems impossible for our export-oriented sectors to really deal with at this point in time could take place. How are you looking at this fresh round of talks that could happen tonight and tomorrow?
I think if US is warming back to India again on the tariff front, I think this has been the biggest roadblock for markets to sort of sustain the momentum. And I think if we get enough clarity here, our sense is that we are headed towards far more better, higher levels, probably new high, especially on the Nifty towards by Diwali, because I think most of the domestic oriented sectors have got a good amount of boost from the GST rate cut. I think it is both the export leg and also because of the fact that FIs have been selling in heavy sectors like, say, for example, BFSI and technology. So that there we might get some respite. So a combination of these two again is a pretty good news for markets to sort of head higher and possibly towards new high.